Hey, what's up, everyone? So what's up? Thanks for coming by. We're about to get dive into something pretty cool right here. The grayscale Bitcoin covered call ETF, right? The BTCC ticker. This is a brand new fund, guys. Um, yeah, this really came out on April 2nd. So it's turning a lot of heads actually. So if you're curious about it, Bitcoin specifically, but you don't want to really manage it yourself, which when generate a yield, you can. So think about not having to use wallets and passwords and to like not have to manage all these things, right? You can just put your money in this kind of fund and it'll grow with Bitcoin but also generate yield for you on top, right? So it's specifically a way to tap into Bitcoin's potential while focusing on generating income. So yeah, that's all from Bitcoin and the volatility, right? So how does it really work, and is this a good fit for you? So we're gonna figure this out in today's video and in today's breakdown, right? So if y'all need some water or some shit, this is about to be a lengthy video, so settle in. We're about to break this shit down together. So the goal is right to by the end of this video, you guys should know what BTCC is, how it operates, its upsides and downsides, and whether you could slot it into your investment game plan. Right, that's the kind of goal here. And then we'll kind of obviously figure out and take a look at the performance so far and talk about the prospectus. But this is major stuff, and you wouldn't want to miss out on it, right? Regardless if you're going to invest or not, it's important to know what's going on out in the crypto world and specifically in the Bitcoin ecosystem, right? As more securities are being financially engineered on top, it's truly important for you to understand what's going on in the crypto land space, right? So first things first, what exactly is this? So BTCC, the Grayscale Bitcoin Covered Call ETF, it's an ETF, right? Exchange traded fund that you can trade on NYSE, obviously, right, guys? It's ran by Grayscale. It's meant for two things: generating income and offering exposure to Bitcoin's price movement. But it doesn't offer you the full exposure, right? And we'll talk about that in just a moment. Bitcoin, well, BTCC actually, they don't really hold Bitcoin directly. So right, we can go over their holdings and things in a bit if you guys are interested, but they don't specifically hold Bitcoin directly. They actually invest in other Bitcoin ETF related ETFs like the GBTC or BTC, the Bitcoin mini trust that they have, right? These funds aim to track Bitcoin's price. So BTCC gives you indirect access to Bitcoin's up and downs. So essentially they hold paper Bitcoin, right? Or I mean, they hold Bitcoin, but the specific ownership of the equities and securities that this specific security has, it's not Bitcoin. They own an underlying which owns the underlying, right? So think of like Misty owning MSTR underlying, which owns Bitcoin underlying, right? Something of that similar nature, but not exactly. So what sets this apart, right? Though it's its income strategy. It uses something called the covered call approach. So if that sounds like some crazy shit, don't worry about it. I think we'll go over that too, guys. So, in depth, right? Let's unpack this, John, right? This covered call thing, right? So imagine you own a rental property, right? And you're still the landlord, but you rent out a room to earn some extra cash, right? So a covered call is kind of similar to that, just with investments instead of real estate, right? So here's how it plays out with BTCC. The property is Bitcoin ETFs it holds, like GBTC. The rent is money made by selling call options on those ETFs. So you're selling the upside in order to make some rent, right? Because Bitcoin actually has a similar like it's a smile skew on the call put options versus like kind of like a skewed smile, right? It's a very symmetrical smile, guys, on the skew for puts and calls. So there's typically a lot of premium to be made even in I guess less bull market or kind of like bullish downturn movements. Um, Call premium is still there, so it's actually a pretty decent way to generate rent. So the call option specifically is a contract that lets someone buy an asset, right? And in these ETF shares, at those set prices and those set dates, BTCC can set a call for that or buy a call for that, right? Specifically, these guys are selling calls, right? There is no buying done here. There's no kind of speculation on the future price. We are simply selling the upside. So we collect that premium up front, and as long as the Bitcoin stays below that strike price, the option expires, worthless, and we keep all of our premium. Otherwise, what ends up happening is we end up having to sell the Bitcoin at that strike price and essentially lose capital on any further upside, right? So think of it, right, as BTCC is just swapping some Bitcoin's potential upside for steady income. That's like the main thing, right? And so it's like saying I'll take a smaller slice of the pie but get regularly paid for it. So the reason why it works mainly is due to the price swings. That volatility makes those options premiums pretty attractive. So this wouldn't typically work with your traditional assets, right? Like Apple and Meta and your typical FANG assets, right? Key features are income generation, Bitcoin exposure, and there's some buffer against these drops because you are generating that income, and the fees are fairly low. We'll get into these things in a bit, but this specific fund is brand new. It has no history. We know it has limited upside. It potentially can occur some NAV decay, but that's not something that you really need to like focus on. That's what comes with joining the fund. But other than that, I think it's important for us to take a look at the website. So specifically, we see that Grayscale is running it, right? It's their ETF. They're claiming high income potential, right? The current price is about $35. They haven't yet had a distribution or 30-day yield. Obviously, they were not going to have that, right? They haven't had a distribution yet. But yeah, we can see here that their expense ratio is 0.66, right? So relatively low. It's lower than Misty's, right, guys? By about 35% almost. It just started, so the AUM it's baby. This probably isn't even updated correctly yet, right? If it is, then it's really only a $2.5 million fund. It's very small. You can see here in its performance so far, it's pretty much just tracked Bitcoin, guys. Nothing crazy. And we can look at its holdings, right? They currently have $2 million in treasury bills. They're holding $500,000 in GBTC, a $56 call expiring in June 20th, 2025. And they also have puts that looks like they bought, right? So they bought puts for $56 as well. So this looks like their potentially synthetic position, right? And this looks like their sold calls. So they made $150,000 selling the upside of $68. So you can see that, I mean, their upside is they're not really selling it super close to the money, right? So the point here is not to get crazy dividend incomes. It's just to slowly beat the performance of Bitcoin, right? And obviously on pops, major pops, like the pops I foresee coming in the future, these funds won't perform as well as you think they would. Now, again, the fund has yet to perform. We have to give it some time, right? But that's what this looks like so far. So it's similar to the Misty thing in a sense where it's not really buying the underlying, right? We mentioned this. They're buying in a cash efficient way, in a capital efficient manner. They're able to synthetically build a position and sell out of the money calls against that. And alongside this, their money sitting in a treasury bill, they're definitely generating some interest on that. And that interest will actually cover all the expense here. So that's expense is kind of negligible in my opinion. But yeah, I think next up was to look at the prospectus. So let me go ahead and grab that for you guys. So yeah, right, quickly. Grayscale ETF, investment objectives, right? Let's take a look here. So their objective is to provide current income. Again, so right away, if that's not your goal, don't look at this fund, guys. Because you'll pay taxes on that, right? So there is the perfect security or equity for you. Just find out what you really need, and you can even really ask me for it. I can kind of guide you towards what makes sense in my opinion. Again, I'm not a professional financial accountant or financial analyst or anything, guys. This is just what I do for fun, and I really just enjoy this shit. So Anywho, the fund's secondary objective is to participate in the returns of Bitcoin through the use of options on Bitcoin exchange traded products whose investment objectives are to, before fees and expenses, track the price performance of Bitcoin. The Bitcoin ETP includes, but not limited to, the GBTC ticker and the BTC ticker that Grayscale runs, right? These are both ETPs, right? That is specifically what the BTCC ticker is trading, options of this, not real Bitcoin futures. This is your management fee, again, covered by the treasury bills, for now at least, right? Who knows how low those bonds will go in the future. But we know that the fund is actively managed and it seeks current income. We spoke about this. And we also spoke about how the fund will purchase and sell a combination of call and put options that utilize the Bitcoin ETP, right, as a reference asset. So the fund will write, as we mentioned, selling the calls at a reference point to generate income. So this is not super in the money or at the money or even closer in the money, right? Guys, this is relatively out of the money, right? If they were had their synthetic position at 56 and they're selling calls at 68, that is more than 10% out of the money, right? So you see, the fund will, in normal circumstances, invest at least 80% of its net assets in options contracts. This is the prospectus, guys. When you look into an investment, you need to dig into the fine-tuned details. It's a necessity. The fund here, it seeks to gain fully synthetic exposure, as we mentioned, right? Via these Bitcoin ETPs. Again, this is fully owned via these guys, right? It's their Bitcoin. You guys, there's no scams here. This is legit shit. But you have to understand how it's technically and financially engineered, right? Because you don't want to think that, in the future you'll be able to pull out Bitcoin for this shit, because you can't. It's not Bitcoin. We see that the subsidiary will follow to the same general, right? So we don't have to worry about these. The subsidiary already has its own. Look, we see here. So for those of you who are wondering about American style or Asian style or even like European style options, right? Obviously, guys, this is a New York Stock Exchange listed security. It will trade American style. Now, it's interesting to note, while options contracts may trade OTC, the fund intends primarily to utilize exchange traded options, right? So again, they may seek to utilize these flex options when available, but the traditional product, they'll, such as the calls or puts, they're essentially going to be trading these on the open market, guys, right? There's no need for them to do OTC or flex options, right? Because like for example, OTC options are for example, like if you're gonna buy like 50,000 contracts or 80,000 contracts, you don't want to put that shit on Robinhood or some shit, right? You're gonna call up the actual investment banks and just place your order via them, right? There's no necessarily like a discount. It's just it doesn't move the market in unnecessary ways, right? And to understand what flex options are, flex options are for flexible exchange options, right? They're a type of options contract that allow traders to customize specific terms. So for example, if they have to, you know, if they have specific needs for hedging or whatnot, they can set certain terms and dates. They can have a specific expiry. They can have specific strike prices too. I mean, you can reach out to these investment banks and figure that out. You can, but again, capital is necessary. Is there? You can't be trading like 10 contracts, guys. They need a volume for those flex contracts, right? But this is not really something that we need to really worry about. I mean, the traditional funds we don't need to really look at, guys. More information. I'll scroll through all of it. You guys can pause as you need, but um, again, Bitcoin investment risks. You guys should really look at all this shit. Take a look, understand. See, this specific security, it has an underlying, and the underlying has an underlying, right? So study the underlying, understand the technology, use the technology, right? Actually, do you know what Bitcoin is? Um, yeah, you guys need to actually use it, understand it, and that's when these products would make sense, right? Because um, why would I why would you invest in this if you don't really believe in Bitcoin, right, guys? I think that's pretty fucking straightforward. So yeah, I'll finish off going through the rest of the prospectus here, and then we can consider. Yeah, there's nothing really, right? We can see this shit is managed by these folks right here. We know that, yes, guys, focus on where you own this shit, right? IRAs, taxable accounts versus non taxable accounts, especially for this kind of dividend income fund. You should look into that, right? These are, again, you cannot just go ape into this shit. You need to look into it, make sure, it works for you. But understand the risks, everyone, right? Understand what you're buying quite clearly. There's not really, they're going over a bunch of risk bullshit. You guys already know what you're getting into. If you're curious about the structure, um, not really much here, right? You need to. This is just your regular financial bullshit. Again, don't need to really look at this. All right, that's it, guys. Peace.